Hello investors, traders, and cryptocurrency enthusiasts. Welcome to our channel, where we bring you the most relevant news, in-depth analysis, and real predictions about the world of digital currencies. Today we're talking about one of the most anticipated events in the crypto market. On Thursday, Bitcoin hit a new all-time high, surpassing the $110,000 mark for the first time and reaching a peak of $113,801, according to data from Coinbase, one of the most respected exchanges in the industry. This surge of 4.18% over the last 24 hours not only energized the crypto community, but also boosted major altcoins like Ethereum, which rose by over 6%, and Solana with a gain of 5%, amid a broader recovery across the sector. In addition, the S&P 500 index also hit record highs on the same day, signaling a significant shift in institutional and retail investor risk appetite. Its alignment between traditional markets and the digital asset space shows how Bitcoin is consolidating its role as an integral part of the global economy, not just as a digital commodity, but as a store of value and hedge against inflation. The breakout to new highs wasn't entirely unexpected, though it had been highly anticipated. For months, Bitcoin had been facing a key technical resistance zone between $110,000 and $112,000, which acted as an artificial ceiling, limiting further appreciation. Many technical analysts had warned that once this level was surpassed with volume and sustainability, the path would be open for even stronger gains. According to Matthias Perizotto, chief analyst at Mint, this movement was strongly driven by continuous inflows from US-listed spot ETFs, as well as growing adoption of Bitcoin as a strategic component of corporate treasuries. As selling pressure has significantly decreased, the supply-demand balance has tilted more toward buyers. The result is clear. Bitcoin is now in uncharted territory and in a strong position to continue rising, potentially aiming for the $120,000 region in the coming months. One of the main catalysts behind this historic rally is the strong institutional capital inflow via US ETFs, which continues to be one of the biggest drivers of the market. Since the approval of the first exchange-traded funds linked to Bitcoin in early 2024, we've seen a steady flow of capital from mutual funds, asset managers, and even retail investors seeking regulated exposure to the asset. Recent data shows that funds such as BlackRock, Fidelity, and ARK Invest have received billions of dollars in net inflows week after week, fueling a consistent and sustainable buying pattern. This contrasts sharply with the earlier scenario, where limited access through regulated financial products restricted participation to a few players. Today, with this infrastructure fully operational, Bitcoin can rely on a much more solid and broad support base, increasing confidence that this rally is sustainable over the long term. Another crucial element behind this historical high is the ongoing impact of the April 2024 halving, which reduced the daily issuance of new Bitcoins to around 900 BTC per day. Historically, these events tend to generate relative scarcity in the market, especially when combined with increasing demand. The halving doesn't just limit the availability of new tokens, it also tends to boost perceptions of rarity and value. Experts point out that the combination of reduced supply and growing demand creates fertile ground for exponential price appreciation. Moreover, many long-term holders are choosing to keep their assets rather than sell impulsively, even with the gains already achieved. On-chain data shows that addresses holding coins for over a year remain stable or are still accumulating, reinforcing the narrative of structural hodling. This kind of behavior helps absorb selling pressure and allows prices to rise higher with less volatility. Beyond technical and structural factors, there's also a macroeconomic component directly influencing Bitcoin's price action. Expectations of monetary easing in the United States, with potential interest rate cuts by the Federal Reserve, have generated optimism across risk assets. In environments of low interest rates and abundant liquidity, investors tend to seek alternatives that offer protection against dollar depreciation. And in this context, Bitcoin positions itself as the leading candidate for digital gold, thanks to its programmed scarcity, censorship resistance, and growing acceptance among institutional players. Additionally, current expansionary fiscal policy under the Trump administration, which includes major tax cuts and private sector incentivizes, contributing to increased money circulation in the system, favoring assets like BTC. All of this translates into a positive correlation between Bitcoin and traditional markets, something previously unthinkable for a digital currency. According to analyst Joel Gelhardo, research director at Bitcoin Starter, the continuation of this upward trend depends on three fundamental pillars: consistent ETF inflows, the halving's impact on reducing supply, and expectations of monetary easing in the US. He emphasizes that spot ETFs are currently the primary mechanism for institutional capital entry, allowing pension funds, brokers, and even traditional fund families to buy and sell Bitcoin safely and transparently. Meanwhile, the April halving brought lasting effects to the issuance curve, making Bitcoin even scarcer and therefore more valuable. Finally, anticipation of Fed rate cuts creates a favorable environment for alternative assets, as it lowers the opportunity cost of holding digital currencies in portfolio allocations. If these three elements remain aligned, Bitcoin is well positioned to test new record levels, with $120,000 becoming increasingly realistic within this quarter. Despite the excitement surrounding the new high, analysts warn of the need for caution. Parabolic moves can be followed by corrections, especially when the RSI enters overbought zones. However, data from Glassnode indicates that long-term holders remain firm. With minimal large-scale coin outflows to exchanges, this suggests that actual selling pressure remains relatively low, which could help support prices even during technical pullbacks. Furthermore, daily and weekly charts show extremely bullish candlestick patterns, with the MACD maintaining positive moving average crossovers and trading volumes rising steadily. At the same time, Layer 2 projects, DeFi protocols, and decentralized staking solutions continue to expand around the Bitcoin ecosystem, enhancing its utility and appeal to developers and end users. With all of this underway, Bitcoin's future looks bright. We are witnessing a critical phase in the asset's journey toward global financial maturity.